Hi, this is Finance and Investing, just Joey style. And I was thinking earlier, uh, I was eating with my dog, and he's sitting right here next to me. That's Gizmo. And after I make him dinner, because I give him a home cooked meal every day, because they put crap in dog food. But anyhow, I put him outside. And when I put him outside, he's not on a leash. Actually, he doesn't even have his collar on right now. I need to put that back on him. But I don't worry about him when he goes outside because he knows where he's supposed to be because he's well trained. And the dogs that I've had in the past, they've all been well trained and people have been impressed with them. I'm not the best dog trader in the world, but uh, I don't worry about him when he goes out there because of his training. So that ties me into the more trained you are, the more experienced you are, the less worry that you have with your finances. And I'm gonna try and keep this video around 10 minutes long because I know people have lives and whatnot. You just want to listen to me yak all the time. So I'm going to show you two different accounts here. And one is a well-trained account, and one's an account that I can show you all the mistakes that you can make within like a 6-month period. So the way that I've done my stuff, I've got about 15 years of experience in the markets, 10, 15 years. And then I have about 20 years of experience budgeting. And I'm very, very good at budgeting. And I have a community called Finance Investing Just Joey Style. I'll put the link in the description if you want to join. I have a free community. And then I'm working on a quick start guide, and it's almost done. I'm going to put a small price tag on that one, though. So, but what I'm going to do is I'm going to show you different accounts, and I have other accounts than these two. But one's a Robinhood account, and I'm going to show you that I lost about $80,000 in about 6 months on a $90,000 account. Almost all of it's realized, and I'm going to show you all the reasons why. And then I'm also going to show you a separate account that is being managed a lot better. The Robinhood account is a very much educational account to show people how badly they can screw up if they don't know what they're doing. Even if you do know what you're doing, you can screw up very bad because there's about 800 reasons why the market does what it does, and sometimes they don't make a lot of sense. So that's where the experience comes in. So let me share my screen. Show you my Robinhood account at first. I don't know why it does that. Um, should load. Here we go. You'll see what I got. Like I said, I have other accounts than this one, but this is the account you're going to see. It started out around 55-ish thousand, and my height, it was almost 90 grand. And now the account's currently worth 8,600. So the account's down 90% from its highs, 85% overall. And right in here is where I'm going to show you that I made a major mistake, and that what people do is I was leveraged. So I made a whole lot of money over a few months' time. About 4 or 5 months, I made a decent amount of money, almost doubled the account. Then the market turned, and I was playing leverage to the upside, leverage with options. So I was playing call options for upside advantage, and the market started to turn. Market started to turn hard because there were a lot of crypto-based plays, and crypto really started to tank off after October 10th, as you can see. And I didn't get out of my leverage until probably closer to here. And that's that hopium of it's going to come back, it's going to come back. So a lot of people, yeah, it's going to come back. I'm right, I'm right, I'm right. And then you're not right. And you're like, crap, what am I going to do? So people get in that bad place when they do things like that. Also, a lot of people want to play options because you can make money really fast, really quick, but you can also lose money really fast, really quick. And there's a bunch of different reasons that options get their value. I also was trading, and I'm not a good trader. So timing, different charts. Here's like a trading chart looks like. I mean, all these different lines, up and down, up and down, up and down, up and down, up and down. That's what trading looks like. You're constantly looking at different metrics and different things to see what the next rough move the market's going to do. And then all of a sudden things can just turn for the worst. And it's really hard to anticipate this bad of a drop. So trading's a lot of information, a lot of execution often. And some people even trade and they'll have like a 99% win ratio and be talking that up. Well, I'm telling you right now, you can have a 99% win ratio and still lose money. So if you place 100 trades and 99 of them you made $1, but on that last 100th trade, you lost $100, you're actually down. So you won 99 times out of 100 and you're actually losing more money than you gained. So win ratios aren't even always that impressive either, because you have to know what's behind the win ratio. Did you actually make money or not? So trading's difficult. And then the biggest reason that I lost most of the money in this account is because of margin. And a lot of new people like to use margin because it gives them extra money. They can get more upside, blah, blah, blah. It's a bad idea. It's a really bad idea unless you have 10 years of experience with margin, you shouldn't be on it. And I'm going to show you why. This account still has margin on it. So this account's only worth $8,600. I still have to sell $10,000 worth of stuff to be completely off of margin. So that's borrowed money. And you'll see right here, if the market keeps tanking, which it's looking like it might, I only have a few $100s before I get into a margin call again. And then what happens there is you're selling off stuff because you're borrowing somebody else's money. So margin, let me show you, like even with HIMS, like it's a great company. I'll explain that later. But I went through a bad time. So if you were on margin, this is 3 months. I mean, this is January 29th to February 12th. This is literally a 2-week period. This stock fell from $30 to $15.80. So 50% drop in 2 weeks. Now it had a nice spike back up. It's coming back down. It's a great company. I'll explain the reasons in a different video. But if you're on margin, you're borrowing somebody else's money, and then you have this drop, they can get you in a margin call, which means they can sell your stuff, or you're forced to sell your stuff, or they choose what to sell for you. And then it stayed down for another 2-3 weeks and then had a nice spike back up. Now it didn't quite get up to here, but you can actually lose money because of a temporary short-term drop and then a recovery. But you had to sell because you were borrowed somebody else's money, and that's the dangers of margin. Margin is a horrible, horrible thing to do. So this account teaches people what you should and shouldn't do. You should not buy options. Almost never. And if you're going to buy an option, you need to give yourself one very important thing: time. At the very least 1 year. I like 2 or 3 years out by buying an option, because you need yourself time. Selling options is better, but stay away from options entirely, especially if you're new, because it's an advanced thing. Also, individual companies are more volatile than like index funds. And I'll show you the SPY real quick. Oops, that's not. I think I clicked on the right thing, maybe. I didn't. The SPY is going to be less volatile than just an individual company. Now, yes, it's still jagged and whatever, and it's coming down, but it doesn't have as drastic as drops as like an individual company would. Trying to think. I think MSTR has had some pretty volatile days. So you're going to have a more drastic drop. So there's another thing. Individual stocks is a more advanced tactic than broad index funds, like the SPY. An index fund is just multiple companies all in once. So this is strategy. Way different than the SPY. Look at these giant spikes. I mean, this was $350 all the way down to 300, back up to 350, back down to 300. Then it fell hard under 200 and still falling off. So individual stocks are more volatile and somewhat more risky than regular stocks. So it looks like the market's falling again. It's the open out. Yep. These are the overnight markets. So we're still bad. But here's the thing. This is the absolute best time to buy. And I'm telling you, my principles for my investing are very good. So my companies, MSTR is a great company, but you can be in a bad time. But as you can see in this account, there was one point that I had 130 some shares of it. And now I'm below 100. That's because of the margin. I sold it on the way down, and then I thought it bottomed out. So I started buying back more because I thought the market was going to be on the rise again. And it wasn't. And then it came back down. So then I had to sell again because I got myself into a margin call. And it's just a never ending spiral of garbage that you're going to be stuck in for a very, very long time. And now I have less shares than I originally did because of margin. It's a bad idea for the average person to be on margin. Don't do it. Don't do options. Don't do margin. Stick to learning some stuff. And then what I teach is passive investing, because you have a bunch of stuff that you got going on in your life. You've got soccer practice and pets and kids and work and the yard work and this and that. You got 100 things going on. The last thing you need to do is be stressing over your money. It's also very important to get your short-term finances under control. And I've got, like I said, I've got a budgeting thing I'm working on that's very good, and it's a very inexpensive price because most people need it. But a lot of people that I've come across, they don't want to know everything there is to know about the markets because you have a life to live. So you need to find money that you can take from your now life to put it into your then life, so your then life is better so that you can grow it. Now I'm going to show you my crypto account. So you can see the dangers of margin, you can see the dangers of options, and you can see the dangers of mistiming the market, because now we're in a bear market and I thought we were coming on the rise and we aren't. So it looks like we might even continue downward. So now, there's stress, especially if you need that money. I don't need any of this money right now because I don't put money into the market that I need. And it's a bad idea if you do, because you can lose it. It affects your emotions even more. These are for the long term. Whenever you put money into any investment, it should be at least 5 years. I say 10 is better, but a minimum of 5-year time frame is what you need. So here's my crypto account, and it's done significantly different. I started this particular account a little over a year ago, and that's going to show back here, but I just let this flatline for a bit. So basically I had 200 bucks in it, and that's when I started adding money to it and whatever. But at one point my account was at $32,000, and now it's sitting at 19. So I'm down almost 40%, 37% overall. And I don't care. Here's my individual holdings, and some people are going to give me crap about not having this in a wallet, whatever, and I'll do some things with a wallet later on, but this is fine. So I made a really good move on a different day on XRP, but what I do is I get to share counts or I get to dollar amounts. Once I get to a certain dollar amount that I put into a company or an asset or a protocol or a stock or whatever it is, I don't put any more money into it. Or once I get to a certain share count, that's my full position. So XRP, my full position is $3,000. When you're like, Joey, you have 4,419 of them. Yes. So anything above that 3,000 is now tradable to me. Those 3,000 I won't do anything with, even though XRP to me isn't a great place to continuously buy shares because it's even below my cost basis. My average is 190, is at 133 right now. I don't have to worry about this account because I'm not looking to sell anything anytime soon. I'm just building up my ownership. I don't have a drip in this anymore, but the projects that I want to own the most of, like Hedera, I have a drip on that. I go $5 every single day. So $4 here and $1 here. I have $5 every single day going into this, and it's currently a 9 set asset. So I'm buying more than 50 of these, about 55, give or take, every single day that it's down here. I have 33,000 of them. And today I actually did a larger buy. I put $1,000 into it because I had some money come in and it was a lump sum. And I want as much Hedera H bar as I can get because I really, really like this project. But it's not about today. It's not about tomorrow. This is about what it looks like in 5 years from now. So I'm going to be building up 55 more Hedera every single day as long as these prices are low. So these prices down here don't bother me one bit. I hope they stay low because that's more that I can buy. Hedera gets back up to like 25 cents. I'm not able to buy as many with my $5. I'm only going to be able to buy 20 every single day instead of around 55. I want more and more. I'd actually, if I can, I'd like to get to 100,000 Hedera, but ultimately, I'm thinking somewhere around 40 to 50,000. I'll be satisfied. But if I can get more, I will because I like the project. I think it's a sleeper. Here, my Stellar, I'm at 9,000. I'm fine with 9,000. I don't need to buy anymore. I'm okay with that. It does what it does. BitTensor, I'm still buying this. This is a big one for me. This is $4 a day drip. And I put 500 bucks in it today. It's a little higher than I wanted it to, but I had the lump sum and I was ready okay to buy it. Still lower than it has been. So this is a buy and hold account. This is called DCA, dollar cost average. I'm buying things every single day that I want to add to. Chainlink, I want to get to 250 Chainlink. I'm buying $2 a day right now. So until I get to 250, I'm not stopping buying this. And then once I get to that share count, then I'll decide if I want more or what the price is, or if there's a big tank off and I got a chunk of money that I'm ready to put into the market, I'll do that. But ultimately, I don't want to have less than 250. And then you have choices thereafter. Now, as you can see, almost everything in my crypto account is red except for BitTensor. It's barely up, but it's still up. But these prices are unrealized. See how this says unrealized return? I haven't sold anything. I haven't lost anything. I'm just sitting here acquiring shares. And as the market comes down, 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 every dollar that I'm putting in buys more and more and more and more. So a lot of people are very bearish throughout this year. And if that happens, that's fine. I'll acquire as much crypto as I can because I have 13 different cryptos. And my bottom three here, Sui, WorldCoin, and Algorand, are all what I consider my riskiest, might not work out. I think Sui's a great network. I think Algorand's got some great potential, and WorldCoin is a big bet. So those are the three that I'm like, we'll see if they do anything. But I'm not really what I would consider diversified. I'm just in the projects that I think are going to do the best over time based on my research. That's how I invest. I don't care if I'm in this sector or that sector or in this section or in that section. I want the best of the best projects, period. Cardano, I reached my full position at 2,000. As you can see, I'm at 2,429. But it's such a low price, I'm still buying either $1 a day or $1 a week. $1 a day. I'm still buying $1 a day because it's a great price. Until Cardano gets to a point where I'm like, this thing's way too expensive. I don't want to buy this anymore. I won't. Ondo, 2000 was my thing. I think I've got a little bit going back in it. It's $1 every single week. And then Solana. I got to 7 Solana. I was building up Solana. I had no Solana at all back in like November. I started putting 250 a day into it. Then I went to $3, then 4, then 5, then 6. And then I got to a point where there were some other projects that were coming down that I'm more bullish on in the future, like HBAR and BitTensor. So I took a big portion of the reoccurring buys out of this and put them into those because I like those projects better for growth over time. So you can change that up, but I'm still buying Solana every single day, and I'm also staked 100%. So the Solana that I have, I'm earning more Solana just by owning the Solana and staking it. So I'm living my life. I'm doing the day to day things that I have to do that I want to do, walking my dog, going to work, playing with my friends, going out here, going there. But I'm investing in the background of my life. Just like my dog's trained, and when I put him outside, I don't have to worry about him. So when I put money into my projects, I don't have to worry about them because I'm well trained and I'm well researched. Like I said, there's only 3 right now. I mean, these ones down here, don't worry about those. Those were just free things. This was when I put a little bit of money in. If it does something, it does something. That's what these are. These are memes. These are actually projects. And then these are my big boys. Ethereum, I don't have as much Ethereum as I did. I sold my Ethereum because I put it into Bitmine because I like that better ultimately for an Ethereum play than holding Ethereum itself. So that's the way I look at that. But this is the way that I look at investing. This is the way that I think most people should look at investing is just DCA, put the amount of money that you can afford to that you don't need for your day-to-day life and that you can put in for at least 5 years. Longer is better. So if you're 20 years old, you've got time. This is who I'm talking to. Anybody that's 40 and younger, you've got time to build up positions over time. I'm telling you right now, it's going to be so much fun to watch, to show you guys this portfolio. I'll probably put it out there maybe once a month, maybe once a quarter, just to see you show how it's improving and how many more of each project that I've earned over time. And then over the next 5 years, I actually believe that this account's going to be more than likely over 200 grand. And I'm not putting that much ridiculous money into it. So, Bitcoin, I don't buy it every single day, but I have several that I buy every week. I got $35 a week going into it. That's what I'm comfortable with. That's what I can afford into this account. So that's what I do. I might actually change this up to where it's buying every day so it has a better buy price. But that's the difference between this is going to be a DCA buy and hold account. And though, even though I'm down just because it was a bad time in the market, like, yeah, absolutely. I wish I would have started buying it now with the money that I had because I wouldn't be down at all and I'd have a heck of a lot more. But I didn't know that was going to happen. And that's the other thing. We don't know what's going to happen every single time in the market. So that's why DCA is better than this trading stuff where you're like, oh my golly, this jumps up and down every single day. It does something. Here's a 5 minute chart. Some people day trade and they're trying to time the market every 5 minutes. Here's the daily. This is what the market does every single day. Each one of these, what they're called candles, has jumped every single day. That's how it's moving through every single day. That's all noise. Ignore the noise and buy the actual investments that are worth investing into. This is finance and investing just Joey style, and it's going to be a lot of fun showing you guys what this can do over time.